Ladies and gentlemen, good day and welcome to India Glycols Limited Q1 full year 23 earnings conference call hosted by ICICI Securities. As a reminder, all participants' lines are in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0. Please note that this call is being recorded. I would now like to hand the conference over to Sanjesh Jain. Thank you, and over to you, sir.
Thank you very much, ma'am. Good afternoon, everyone. Thank you for joining on India Glycols Limited Q1 FY22 results conference call. We are joined on this call with India Glycols management, represented by Mr. Rupal Saraswat, Chief Executive Officer, Mr. Anand Singhal, Chief Financial Officer, Mr. Sanjeev Gurwara, President Marketing, Mr. S.K. Shukla, Head Liquor Business, and Mr. Ankur Jain, Head Legal and Company Secretary. I would like to invite Mr. Rupal Saraswat to initiate the proceeding with his opening remarks, post which we will have an opportunity to go into Q&A session. Thank you. See you, sir.
Thank you, Sanjesh, and very good afternoon to everybody. Thank you for joining us for this investor call. Let me take this opportunity to give you a brief overview of how the performance has been, and then we can discuss the questions. Some of my colleagues will also participate in this overview. So let me come directly talking to you about the performance numbers. So for quarter 1, FY23, we have had a turnover of 1,868 crores at a gross level, which is up 0.1% or nearly flat. We have had a net turnover of 808 crores, which is down by about 6.6% compared to the same quarter last year. The EBITDA is 69 crores, which is down in reported terms by 12% compared to same quarter last year. And we have had a modest EBITDA margin of 8.4%. However, it is important to note a few things here. The comparative terms look much more suppressed because, last year we had the EOD business, which was transferred to the joint venture with Clarion. So therefore, those numbers are not there in Q1 of this year, which were included in the Q1 of last year, which has therefore affected our net turnover, EBITDA negatively. So if I take that apart, what you will see is that as far as top line is concerned, we've had significant top line growth in all three sectors, which is BSPC or bio-based specialties and performance chemicals, portable spirits, as well as in nature biopharma, and I will touch upon that a little later. The other thing which has also driven top line growth is the fact that there has been a very sharp escalation of costs, which also means that it has helped us get the top line because we've got some price increases. But it has had an adverse impact in the sense that, the margin pressures continue, and we will talk about that in a minute. Those are essentially feedstock, energy, and trade headwinds that we've had. In terms of high-level highlights, as I said, we've had strong sales growth in all the three segments on a like-to-like basis. When I say like-to-like basis, I take the EOD business out, and broadly speaking, there is roughly 18 to 20% increase in the chemical sector. There is again 25-26% increase in nature biopharma, and there is 30+% increase in the liquor segment. One of the things that we were doing in the nature biopharma business was to diversify. The good thing is that whilst we have maintained the thiochloride leadership position, we've also shown good growth in nicotine, actually excellent growth in nicotine as another product. And the joint venture performance has broadly been in line with the expectations. As I mentioned to you, the key talking point for us from a performance perspective has been an unprecedented increase in raw material and other costs, which in particular have impacted IGL quite significantly. So while there has been a fall in the crude prices, there hasn't been a commensurate fall in the ethanol prices, which has also put pressure in terms of our products being competitive in the marketplace, despite the fact that we have certain unique position with respect to our products being bio-based. So the energy costs continue to remain very high. I will touch upon that in a minute. Looking forward, we had mentioned to you that we are installing 2 grain-based bioethanol plants for our businesses, which means biofuels, bio-based specialties and performance chemicals, as well as potable spirits, which was 180 KLPD in Gorakhpur as well as in Kashipur. Now, the installation of the plants has been done. The trials are being conducted right now, and in near future we will have these plants fully functioning, and we think that medium to longer term these will have a very positive impact on our margins as well as top line. We continue to steady sort of march in the IMFL space with a few launches like Zumba, Lemony, Amazing Orange, etc. Again, looking forward, we had mentioned to you that we are working on building up a new specialties value-added business. We have had a project approved for that, and now the plan for that is right now being erected. We have a good pipeline that we are working on in terms of new specialties. And in fact, though a very small point, it is good from our perspective that even though our new plant is not ready, but our first product, which is in the oil field space to a major US company, is already commercialized, and we've started supplies, and this is a significant volume for the year. And we are working on a new product pipeline across 6 segments, 20 products, which includes some specialty amines, oil field products, some plasticizers, green solvents, and so on. And as we progress in the direction, we'll keep you posted. A shot in the arm or kind of encouragement for us was that we were awarded together with our customers, Unilever, and partners, LanzaTech, the ICIS Global Innovation Awards in the surfactant space, which is encouraging for us. And so that we look forward to doing more. I was talking to you about commodity price trends. I think it is important that I give you a flavor rather than just say that the prices have been high, so that you understand what has been impacting us, which also means you will also have a better understanding of what we can expect going forward, because these prices will not continue to rise forever. So if you go back in comparative terms, say let us talk about coal, which is a major part of our cost, product cost, and it is a very high part of our cost. See, in Q1 2021, on a base of 100, the coal prices now are more than double, 209, and you are all aware of it. In fact, if you look at what's happening to coal, is that from a price of about 5,500 rupees per metric ton, if you were to buy, and that is what we are doing and many others are doing, coal from the private market, it is in excess of 15,000 per metric ton, though that is higher than the average that is costing to us. If you look at ethanol, from a base of 100, it is up something like 59%. And however, some raw materials have also started to soften, like acetic acid has been coming down. We also see that ethanol in the international market has softened a little bit. And we think that going forward, that will also help us. I had plotted some ethanol price trends in terms of imported ethanol from the US. If you look at where our company sits in this business, it is important to understand this, and it will also give you a better understanding of where we stand. One of the things which drives ethanol prices locally and our costs, because we had been importing quite a lot, is the price of imported ethanol, US being the largest exporter of grain-based ethanol. So we have been continuing to buy ethanol at a rate which has been lower consistently than the spot prices because of the timing of where we bought it, which has been good. But there are several factors which have been driving ethanol prices, or whether it's upwards or downwards. Some of the key factors to understand are the fact that US ethanol production is impacted by gas prices because it is an energy-intensive process and they use gas. And the grain prices, which is wheat and corn prices, have also surged due to the Russian invasion. You know, Ukraine is a big producer of food grains. Many countries continue to focus on blending. You heard recently the targets of 20% and 25% blending by the governments being repeated. There is broadly an expectation of a global slowdown, which we are also seeing for our businesses. And the expectation is that the demand for industrial ethanol globally is expected to come down in Q4, and the prices we expect will soften. Some pressure in terms of decrease in rice production in India may also put some pressure, but still grain-based or rice-based ethanol is going to be much cheaper than imported ethanol for us. Longer term, the general consensus in the world seems to be that the world, particularly the US, will move more and more towards EVs rather than ethanol blending, which means that even if it does not happen in India, you will have more and more corn being available for converting to ethanol for other purposes, which will help us get ethanol for sectors like ours at more competitive prices. You know, it's a very connected world, so it doesn't matter what's happening here. If something big happens in the US, that also affects us. You know, the numbers that we are hearing in terms of targets are also like, 50% of the vehicles, which is cars and trucks in the US, would be on EV, say by 2030, which will make a big impact. And so that's broadly in terms of the ethanol space. I have also shared with you a chart on freight trends, which helps us understand what the pressures were, but which also helps us understand that, look, these are not going to stay forever. Let me give you an example. So if you look at the freight costs of products that we ship to the US, and I have actually calculated it roughly in terms, rather than state in terms of dollar per container, which is a little more difficult to interpret, converted it into rupees per kilo of our product. So the freight cost to the US, for example, which was close to 7 rupees a kilo in Q1 of Q2 of last year, up close to 46 rupees a kilo. So what you're seeing is that the freight costs have gone up by a factor of 5 or 6 times, which therefore puts a lot of pressure. Now the good thing is that it seems that the pressures which were there in the freight market have also started to soften, and we expect that this will continue to come down in the near future. And the same trend you see for other products, areas where we export, whether it is Shanghai, whether it is Indonesia, Dubai, Houston, or Taiwan. And in terms of how we have done on our market sectors, just high-level commentary. So when we talked about bio-based specialties and performance chemicals, we've seen a top-line growth of roughly 20% year-on-year on a like-to-like basis. If I take the EODs out, of course, also driven by price increases and the fact that costs have gone up. As I said, particularly chemicals has faced a lot of pressure on margins due to the sharp increase in ethanol and utility costs. We've continued to work on a healthy new product development pipeline. I mentioned about it. We've started the work on the phase 1 of the new specialties unit, which we intend to commission in the first quarter of the calendar year, next calendar year. And we've also started to commercialize some products. But for us to scale up, really, we will have to have the new unit ready. In the potable spirits sales, we've seen a healthy top-line growth of something like 36% year-on-year. And I must also mention that while I'm talking about healthy sales numbers, the comparative quarter last year was also a quarter where, the demand was under pressure, to keep that in context. But margins in potable spirits have been impacted due to sharp escalation in cost of ENA, which is the purified version of ethanol, increase in logistics and packaging costs. However, our grain-based plants are in the process of being commissioned. We are taking trial production that will help us both in terms of feedstock security as well as costs. Another thing that we are keeping a close eye on, because we have an interest to participate in this market, is the excise policy volatility in Delhi. Let's see how it plays out, but that's something that is not helping the industry overall, this uncertainty. In N-Nature Biopharma, which is a smaller segment that we have, again, compared to the rather subdued last year that we had in terms of volume growth, we've had a good top line growth of about 28%. We've maintained margins. We've diversified into nicotine, focusing on diversification, and we've maintained our market share in thiopolgicoside as well. I've already spoken to you about the challenging operating environment in terms of sharp increases on costs, so I will not repeat that. But what I may add in terms of the operating environment is that there continues to be a high degree of uncertainty in the macroeconomic environment. And right now what we are seeing is somewhat subdued demand growth in our end markets. However, on the positive side, there is a increased trust on sustainability by governments as well as industry, which may have some challenges, but I think on the whole, medium to longer term, we definitely think that from an ideal perspective, it presents opportunities. And irrespective of the demand growth slowdown that we may be seeing, we believe that the products that we have in our portfolio and the ones that we are adding, we will continue at a macro level see growth over the times to come. So that was a high level commentary on how the quarter has been. Let me hand over to my colleague, Mr. Anand Singhal, to take you through the financials.
So, good afternoon. So net sales, net of excise, for the current quarter is 808 crores vis-a-vis 651 crores of the last quarter. The EBITDA for the current quarter is 69 crores vis-a-vis 56 crores of the last quarter, which is for the current year it is 8.4%, while it was 8.6% in the last quarter, which is slightly lower than the last quarter. And PBT is 35 crores vis-a-vis the 259 crores of Q1 last year, which includes the profitability due to transfer of our EOD business to Clariant for rupees 240 crores. And PAT is 28 crores in the current quarter vis-a-vis 211 of the last year first quarter and 67 crores of Q4 last year. So this is the brief, and I think everybody has already gone through the financials, and we will take up the questions whatever in due course. So this is the brief about our sort of financial performance for the current quarter.
Thank you, sir. Ladies and gentlemen, at this stage, we will be conducting a question and answer session. Anyone who wishes to ask a question may press star then one on your phone. If you wish to remove yourself from the queue, please press star and then two. Again, if you would like to ask a question, please press star and then one. The first question we have is from Balas Subramani from Ironheart Capital.
Good evening, sir. Thank you so much for taking my question. Congratulations for good set of numbers. My first question regarding that new grain-based plant. These plants have started trial productions. Previous calls mentioned that these plants are expected to meet 40% of ethanol requirements. When we can able to achieve, if there is any timeline, please mention. These are my first questions, sir.
So, right, in terms of the numbers as a percentage, whatever we've given, that will be maintained. We expect that in terms of capacity in this quarter, we should be able to achieve our capacity in terms of grain production. No doubt, we've had a slightly prolonged commissioning exercise. You know, we were also doing some retrofitting in our plants, and we were using some older equipment, etc. So that has led to a slightly longer commissioning and capacity realization in terms of trials. So that is what we expect.
Could you please share some light on the market size, demand environments, and what kind of opportunities we can able to capture going forward?
So, tell me what specifically are you talking about? Are you talking about chemicals, potable spirits?
Like, sir, in nicotines, where we are experiencing demand, especially which are the sectors?
See, the major use of nicotine is for therapeutic use. Yeah. Look, nicotine, we are new players in the nicotine space. So nicotine, the major purpose of purified or extracted nicotine is, as people want to get rid of smoking, which is highly hazardous, even for a therapeutic use, things like patches, etc., use nicotine. So that's the major use for our nicotine. Some of it may also find its way into vaping, but I don't have the exact numbers into how much is may be going for vaping compared to therapeutic. Our purpose and objective here is to supply nicotine mainly for therapeutic use to pharma companies who are supplying products which help you overcome nicotine or smoking addiction.
Branded country liquor segments, we are targeting 6 states, like include Chandigarh, Punjab, Rajasthan, and UP and Uttarakhand, like where we are right now in terms of penetration.
So just 1 second. Just give me a second. They wanted to know brand. Are you talking about branded country liquor or are you talking about IMFL?
It's a branded country liquor segment.
So branded country liquor segment, we are the leader in UP. We having the approximately 24% market share in the UP. And Uttarakhand, we are also the leader in the country liquor business.
Okay, sir. Sir, like we are targeting 6 states further.
No. I think you are mixing both. I am discussing about the country liquor business.
Yes, sir. I got it, sir.
See, what you are referring is our other business, which is Indian-made foreign liquor. IMFL and country liquor, both you are mixing.
Yes, sir. I got it, sir. Thank
so,
you.
Yeah, okay. Maybe my colleague Rajuji might just add as to where we stand in terms of our plan.
As far as IMFL is concerned, our home state is UP. Where we have good presence in IMFL segment. In the Tetra segment, we have very good market share, more than 50% market share, and we got good price increase in the Tetra segment from 1st April, which has made the business interesting. But that is still, UP is a huge market as far as IMFL is concerned, and vodka particularly, like Magic Moment sells about 100,000 cases per month in UP alone. UP accounts for about 20% of all India vodka sales in that price point. So we have launched a brand called Amazing, which is now already number 2 next to the leader brand, and the volumes are increasing at an increasing rate. And since it is a home state where we have a huge advantage of country liquor, so we leverage that strength and get our IMFL also going. Now, as far as 6 states you mentioned, our presence in IMFL in Uttarakhand is also very prominent. We have about 20% market share in IMFL segment, even in Uttaranchal or Uttarakhand. which is supplied from our mother unit from Kashipur. Now we are by and by moving into other states like Delhi, like Rajasthan, like Chandigarh, Punjab. But we are very careful because this business requires a lot of working capital, and we have to be sure about the payments. So we are, as a policy, we are moving into markets where the payments are secure, where the realization is handsome, because these are new brands. They will require time to nurture. We don't want to lose margins, have less margins and lose money. So we are going stepwise, and the good point is that our amazing vodka is well accepted. So we are concentrating on the white spirits, and as a next step, as our CEO rightly mentioned, we are launching a Zumba Limon. You know, limon, India is a tropical country. There is huge heat 10 months in a year, and particularly in north the heat is severe. So people want refreshing citrus drinks. So it's an order of the day. So Zumba, we call it Zumba, and Lemon, which is in the price point of Bacardi, and it is in a premium segment. And riding on the success of Amazing, we want to go on up. Consumers who want to upgrade and go on a higher price point. We want to capture those consumers with our Lemon, or we call it Lemoni because Lemon is trademarked so by somebody else. So that is what will hold future. But as take time, stepwise we have to go, and but once there, then we'll stay there.
Thank you so much for detailed answer. I'll come back into queue. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, just a reminder, if you would like to ask a question, please press star and then 1 now. The next question we have is from Bajirang Kumar Bhakna from Sunidhi.
Congratulations for a good set of numbers. My first question is towards liquor margins. We have been, going through a rough patch for last couple of quarters where, the country liquor segment, the UP government has not allowed for any price increase despite the increase in fuel cost and packaging cost and so forth, raw material cost. So there are talks which are going on in the market that, the industries people have met recently the government officials, and they are demanding this for a quite long period of time. When can we expect, this to happen, and, what impact do you see that it will have on our margins? Can we go back to the erstwhile margins when, we were making almost, 40 crore kind of EBIT on a quarterly basis, which has now come down to almost 20 to 25, crore rupees. So if you could guide on that, it will be really helpful. That's my first question.
Good. So, going to your question, you're surprised to note that still in this adverse situation, India Glycol has maintained the market share of 24%. First. Second, besides the peak increase in the packaging material price, mainly, the PET resin, the CC boxes, aluminium, all the packaging material prices has gone more than 50 to 60%. And truly impacted our margin. That's why, the UP distillery is trying level best to get the prices increased on behalf of all the members. We are trying, we have approached to the government, and hopefully we are expecting another 10 to 15 days we will get the price increase. What would be the price increase? It is not appropriate to just inform you because we are not in the panel to decide the numbers. But anyway, we are expecting a good price, and we expect a good, the profitability in the coming months.
Okay, got it. So hopefully we might go back to our old glory of those numbers which we were achieving before these all price increases.
Certainly we are expecting. Hopefully.
Yeah. And my next question pertains to, the grain-based distillery which has already, going through trial periods of this, both Kashipur and Gorakhpur. So, the erstwhile in last 2-3 Concalls we have indicated that this could help us to reduce our, the cost structure of ethanol, and the margins could go up, in the overall company segment wherever we use it, whether in chemical or it is in liquor segment. So can you give us some update, though Rupak sir has already indicated that this quarter will see this, but when can we see full utilization of, this facility, and what sort of raw mat linkage, hedging that we have done so far? Because, we are also hearing that this year, the rice, which is a commodity for us, is not in a good shape, and there are a lot of reports which are saying that because of heavy flooding, this time the acreage is going to be pretty low, and there could be some cost inflation on the rice side. So what is the hedging strategy that we have adopted, and what sort of inventory that we are maintaining, to safeguard us, for those cost increases and get the ethanol at the right pricing? And we earlier indicated that this segment can do 600 crore kind of, top line, and 150 crore kind of EBITDA. So some sense now, since it is, doing the trial runs, what we guided, can we say confidently that this is something which is achievable for us? That's my second question, sir.
So I'll start with your second question first. So in terms of a potential 600 crore top line growth and whatever 100 to 150 crore, what you said, bottom line impact, that was a correct assessment of the project, and that was done on the basis of all grain-based ethanol or significant portion of that being sold for biofuels. But from a bottom line perspective, of course, it depends on where we use it, and we will obviously use it in areas where we make maximum money, whether it is biofuels, potable spirits, or chemicals. And as far as the use is concerned, in comparison to, say, imported ethanol, even at some of the slight escalation in grain prices that you may see, produced grain-based ethanol is definitely going to be cheaper. That assumption is still correct. After, of course, we've commissioned and we start running up to capacity. So does that answer your question? As far as inventories are concerned, look, fortunately, we are in such a position that, one, we have, I don't know the exact number, we've got significant inventories of imported ethanol which was lying with us. Secondly, we have the opportunity also to buy ethanol domestically, which is also, as of now, somewhat cheaper than what is imported ethanol. So that option is always there. And if we are, say, for example, not able to meet our requirements based on grain, which we know our grain may not suffice for over a long period of time, even if we put that to other use, we can always buy ethanol locally, or we have a season coming up where we can buy molasses and make molasses-based ethanol as well.
No, I was talking about rice inventory that we are maintaining, to run the plant at full capacity, because there is an expectation that this rice prices will shoot up because of the lower acreage. So just wanted to understand from that perspective what hedging that we have done for that.
See, our both plant, Gorakhpur and Kasipur, is in Tarai regime of Indian continent. And the paddy, new crop, is almost going to arrive after 15th of October. So we have the 2 months, I think, crucial time. This monsoon time is start from July to September. So the crucial time is up to the 15th October, and we have the sufficient stock of rice to continue our production till that day. First. Second, I would like to reiterate here that spirit made for grain, it isn't very good in the taste as compared to spirit made from the molasses. That's why UP government has made compulsory 1 country liquor segment 42.8 degree exclusively from the grain spirits. So this is the future indication how the government is inclined with promoting the grain spirit in UP. most probably the government may allow further stream to cater with the grain spirit for the betterment of the poorer. So that's why this year we started new segment of country liquor only in the glass bottles from the April, and we stood till now the first position in the supply of 42.8 degree segment, which made from the grain spirit. So customer liking is abnormally super in this segment.
I may add something to say that, look, when we are in a business which uses agricultural feedstock, unlike in the business of crude, we will be faced from time to time in situations where there will be surplus and in times when there will be some shortfall.
Yes.
So our business strategy, of course, is sound and clear in terms of why the reason this plant was put in and why we have gone for grain production. And those fundamentals do not change. For example, you are, on one hand, you are reading reports about, say, rice prices may go up, because of war and flooding and all of that. But I'm sure you are also reading that the government of India, in terms of its blending policy, is only more aggressive, not less aggressive. Yes, they have not changed that. So which means there is, when you are in segments like, which are based on agricultural feedstock, we will be sometimes faced by quarterly or yearly challenges or opportunities. It works both ways. But the longer term strategy of the government of India wanting to go up to 20-25% blending and more is intact. You and I know that. The longer term strategy that India will continue to be a major producer of rice in the world is intact. We know that. The longer term issue, or the issue that we had, where we have many times significant amount of stocks of damaged grain, is still, the case, which is what the government had considered. And the policy for blending or ethanol blending, which is a major factor why these grain plants are coming up, apart from the opportunities that Shuklaji spoke about, that story has not changed. It is possible that we may have a challenging 6 months, quite possible. Unfortunately, we are seeing that headwind early in our commissioning. But the longer term story is intact. I don't think that has changed.
Got it. And if I'm not wrong, that we have the ancillary infrastructure with us, so we are best placed in terms of making margins, especially in the grain segment, because it is not fully green for us, because the ancillary infrastructure we got where we didn't invest much. So as compared to other players who are coming up in this space, we are better placed to make better margins. So just to summarize, my understanding is right?
Yes, and I have again said that when you compare people in the similar business that we have, I think strategically we have taken the right decisions. We are amongst, I don't know of any company which has 3 sources of ethanol and 3 potential outlets of ethanol.
Great. And
but yes, we are facing challenging times, there is no denying that, which we have told you clearly where it is in terms of the positives as well as challenges.
Yes. And just Anandji, one question on the capex side, where is we want some clarity from a cash flow perspective. What is the capex number, which is going to be spent in FY23? If you could clarify, that will be really appreciated.
So, actually we have some capex expenses which is to be done on grain, because boiler and turbine is under commissioning stage. Apart from this, we are going to put up one specialized chemical unit. So total capex, which we hope that the expenditure will come in 22-23, will be around 175 to 180 crores.
Okay, got it, sir. Thank you very much. I'll come back in the queue for follow-up questions. And best of luck to the entire team of IGL.
Thank you, Bajrang.
Thank you. Ladies and gentlemen, just a reminder, if you would like to ask a question, please press star and then 1 now. The next question we have is from Sanjay Jain. Please go ahead, sir.
Thank you. I have a few questions. First, on the new product development, the products you have listed, one among them is amines, the second one is green solvent. Can you help us understand what in the amines we are trying to do and also in the green solvent?
So Sanjesh, I would. Okay, so we are developing certain molecules till they are pilot planted and commercialized. I would hold back the names, but I will tell you broadly. See, there are three things which are required for specialty amines. One of the raw materials is ethanol for one range of amines. The other raw material for another range of amines is ethylene oxide.
Right.
And ammonia, of course, or some other form where the nitrogen molecule comes in. So our strength, if you see, is one, we have ethanol, but many people have ethanol. That is one thing. But we are the only one probably in the world, the second one, and the only one who would be doing amines which are based on bio-based ethanol. Okay, and so that category of amines we are examining, and the major customers for these are also say, significant personal care companies, for example. We are doing lab trials, we are sampling them, so we are looking at amines which are either based on various alcohols, ethanol being one of them, or ones which use ethylene oxide, which gives us the advantage of one having ethanol and ethylene oxide, more importantly having bio-based ethylene oxide, and last but not the least, our understanding that we have of the specialty end markets like personal care, even though that business in some other product ranges is part of the joint venture. So we still have the relationships and an understanding of applications and the process development and synthesis know-how, which is an added advantage. Just to clarify, when I'm talking about the product ranges here, all of them are product ranges which are not product ranges identified for the joint venture. They are separate. They are in the non-conflict or non-compete space.
But can they buy from us for their product, or we have to go directly to the customers?
No, for these we can go directly to the customer, but the JV wants it like other customers, they can also buy.
Got it. And will it be a long chain amines or a short chain amines?
These are right now we are looking at short chain amines, but as we complete our development work, we'll keep you posted.
And at what stage are we, or when can this product be commercial? Say, will it take a year, 24 months? How far are we from a commercial stage?
Look, some of these products, now you are only talking about amines, but there are several new products, okay?
Right.
As I mentioned to you, an important product which was completely new in terms of chemistry, we have already commercialized, which is for a significant oil field player in the US. We hope to try and do more products for them. And that product itself, we are expecting volumes of something like 700 tons per year. But that is based on whatever existing infrastructure we have. We need new capacity. We are already talking to another major company, I cannot name them right now, where there is a commitment of something like 2,000 tons of a specialty molecule. Lab trials are already being done. We are already in touch with the major for a bio-based amine, where already volumes of something like 1,500 tons have been indicated to us. So these will start flowing as soon as our new specialty unit is up and running.
And when is
but some products, you see, when you are talking about a product pipeline, you are talking about a stage gate process. So in the list that I review with the team, we are really talking about something like 25 different development projects. We all know that we are not going to make big in all 25. The point is to be able to make big in 6 or 7 of them. So we have top 10 kind of products where we are working on. Then we also have, made some plasticizers. We started to sample them. We'll see how it pans out. But amines, definitely we are in discussion. Some oil field products we've already commercialized, and there will be more which will come in the process. Okay. I think as it develops, give me some time. We'll have more things to tell you in the NSU space.
Yeah. And what is the green solvent we intend to make?
See, what happens is, when you talk about green solvent, there are two categories which we already can leverage. One of them is based on ethylene oxide, broadly glycol ethers of various kinds. But those glycol ethers can also be modified by enhancing their properties through formulation and position them as bio-based solvents. That's one. Then there are a number of esters which are used as green solvents. So we are working on some esters as well.
Great. And when is this specialty facility likely to commission for us?
February, March of next year.
Okay. So we are like 6-7 months to there.
Yes. So we, as I mentioned, we have already started the construction initial stages.
And it will be a multi-purpose plant, right? Because we are trying so many products, it will be a multi-purpose plant to start with.
You are right.
Okay. The second question is on the relationship between crude and ethanol. I understand that, but how do you see this economics playing for us in medium term? Now that we are getting into a lot more products from the ethanol side, how do you think? And we have a limited capacity on ethanol, right? We are not self-sustained on ethanol. We buy a lot of ethanol from US, so that's the volatility. And our competition goes through crude, so we will always be either at an advantage or a disadvantage. But the history says more on the disadvantage side. How to see this relationship from here, and assuming that there is more EV coming in, that means the crude prices will be under pressure in the medium to long term. How should we see a margins in a medium to long term for ICS?
Okay. So I will answer this question in two ways. One is that the interconnectivity between crude and ethanol is dependent on so many factors that I can only claim ignorance in being able to predict it. But that's in the shorter term. For example, crude, ethanol, biodiesel, food, they are all connected. Let me give you an example. If there is increased demand for soybean because Chinese are eating a lot of pork, which means that people in US start to grow more soybean and less corn, which means it puts an upward pressure on ethanol. Green transition. One of the reasons why ethanol has been under pressure is that a lot of Europe and Latin had invested a lot in green energy, which is hydel energy, wind energy. So last year, some of the green energy that they were getting tipped, which means again greater pressure on ethanol. If crude prices go up now, unlike say 10 years ago, if you go to France or if you go to Brazil, at the petrol pump you can decide how much ethanol you want, how much petrol you want. You can actually blend, so consumers start to shift. Then we talked about the fact that global, socio-political situations like Ukraine war. So I think it is a little complex, but let us look at it another way. In a more longer-term strategic perspective, the fact is that the world will move more and more towards feedstocks which are environmentally friendly, which are greener, which have a lesser carbon footprint. So this trend will continue. And the other, I said I answer your question in two ways. One is that this trend will continue. Second thing is, in future there will also be innovations. And since you talked about a more longer term thing which I had mentioned about EV, is look, the future of ethanol will also be in terms of carbon capture from emissions. What we are doing with LanzaTech is one example, which is carbon basically captured from emissions. The other is cellulosics. You saw the Prime Minister inaugurate one plant, though it is a piece of demonstration where ethanol will be produced from agricultural waste. So this is the longer term future of ethanol, where we move from sugars to starches to cellulosics to carbon from emissions. That longer term trend will continue. And the second point was that apart from depending on ethanol macroeconomics for the profitability of a company, the focus has also been that become a little independent of it. Not necessarily becoming independent by dropping it and not using it, but becoming independent by getting into more value-added products. One of the value-added products that we talk about is portable spirits, which is obviously more buffered to feedstock price variation. And the other is knowledge-based chemicals, which is value-added chemicals. So that's the broad strategy. There's a longer-term strategy which we still believe is right to maintain our strength in ethanol, and the strategy to make sure that we are adding into knowledge-based value-added chemicals and other value-added products like portable spirits. Does that answer your question, Sanjay, a little bit?
It answers, but it is still blurred to me. We are telling that we cannot find a right balance between crude and ethanol. So we are telling that we will go more forward integration away from ethanol and protect ourselves.
No, that's not what I said. And I clarified that.
Yeah.
We did not say we will move away from ethanol. We said that we believe...
Moving far from the ethanol value chain. like potable feed, specialty, which will have lesser volatility compared to ethanol, right?
So that's based on the fact that we have a strength on ethanol, but has other reasons for us to do value-added products. So both potable spirits and some of these chemicals will use ethanol and clean oxide.
Great. I will sit with you sometime to understand this better. Probably it will require a lot more deliberation. The other question is on the plants on the trial run. How has been the yield? Are they at the expected yield what we are getting right now? And the second, probably I may be naive, but correct me. Is it only rice we can use as a feedstock or any grains? Is there a fungibility on the feedstock? That's the second question. And these are my questions on the new facility.
So, very simple to your answer about the various available feedstock which can be converted into ethanol. See, starch is the main criteria who convert into the ethanol. So, in the rice, in the maize, in the bajra, in the potato, all are the starch is the various percentage. Why everyone is using, the grain rice, the broken rice? Because of the starch content. Approximately 69 to 72% starch contents in the broken rice, and 60 to 62% in the maize. Though India is going to explore. We have a lot of deliberation discussion with the UP government about the genetic modified seeds to grow the productivity of food grains. Not only to the productivity, but quality of the seeds, which can be utilized for the higher yield and more productivity. But coming to your question, we can use with the same plant maize, broken rice, and bajra, and up to some extent, the wheat flour. And you have asked about the what yield. Yield we are getting around somewhere around 480 liters per ton.
We are getting that, right? The yield is there, right?
Yeah.
Hello?
Yeah.
Okay. So yeah, that's it from my side. Thank you. I think there are a few more participants in the call.
Okay.
Thank you very much.
Thank you.
Thank you, sir. Ladies and gentlemen, the next question we have is from Sakeet Kapoor from Kapoor Co. Please go ahead.
Namaskar, sir, and thank you for this opportunity. Sir, firstly, as you were mentioning that these figures are not to be on a comparable basis. So when we look at your consolidated numbers, are they comparable on a like-to-like basis?
So consolidated numbers are not comparable on a like-to-like basis because the consolidated results for last quarter will have the EOD business which is now part of the joint venture.
Okay. But on a Q-on-Q basis, they are comparable. When we look at the March numbers versus the June, they are very much comparable.
Yes, March versus June is comparable.
Okay. So looking at what we did in the month of March, although there is a significant increase in the revenue for the bio-based specialty and performance chemical, the margins have considerably reduced. So are the effects of mainly the coal or also what explains this significant drop since the revenue have gone up, whereas the profitability has depleted?
Yes, so Saket, I actually began my opening slide by mentioning this, that we've seen top line growth, which has also been helped by price increases, but we've seen some growth. But the biggest challenge has been the increase in cost, which we have not exactly been able to pass on. And these have been largely increase in ethanol cost, which is a big increase in coal cost, which is a huge increase, and also some other factors, particularly in the export market. Last year, we were helped by high prices of ethyl, butyl, propyl in the glycol space, which have come down this year. So that has also put pressure on our prices and made it difficult to increase prices opposite them. So that's a combination of what happened in the crude alternatives, what happened in the MEG space, which has been unique last 1 year. Somebody had mentioned that it's a historic trend. We are always going to be in a disadvantage, which is not correct. Our disadvantage with respect to crude is a very recent phenomenon. And so these are a combination of factors which has really pulled our margins down. And if you see going forward, now I can't say whether it is going to be 5 months or 6 months, but the fact is that your coal prices cannot continue to be 15,000. The government rates are still maintained at 5,500. The issue is that the government is not, there are supply issues and no rakes are available to transport that coal. So therefore we are having to buy private coal. And the fact that the global energy prices continue to shoot up, and if you were to buy actually imported coal, it is 25,000 plus. That is one of the reasons why India is suffering. Because people who were to buy imported coal, that has got slowed down as well.
But sir, when we look at your say March number of 430 crores on the bio-based facility and 549 crores for the June one, there is a significant increase in the revenue. So the end product prices have definitely moved up. So if you could explain to us, had that been the case, that there is significant increase in the revenue, but the bottom line goes down. So there is not complete pass on the inflationary trend. This is what the understanding is.
Sorry, your last sentence, can you just repeat?
Sir, I am trying to make sense of what could have margin declined when the revenue has significantly improved. On a quarter-on-quarter basis, there is a significant increase in revenue from 430 to 549. So is it only the inflationary part on coal and freight cost that has dented the same?
Dented the margin?
Yes.
Yes, so two of them, and the fact that we were easier in terms of competitiveness with some products like ethyl, butyl, propyl, glycols, which were more expensive in the international markets than this year. And those are the three main reasons. You are absolutely right.
And sir, for the MEG prices, there is a significant declining trend in the MEG prices. Correct me, sir, today, currently, is it trading in this $525 band, 46, 47 rupees a kg? That is down from 58 rupees last quarter average?
I don't know the exact numbers, but it is true that it has come down further.
Okay, so what, out of the total portion, what is the contribution from MEG sales, sir?
Sorry, I would just like to add here that you are absolutely right. The domestic prices are in the range of 55 to 58, but those are the crude-based MEG prices. We are essentially operating in the bio-based MEG space, and most of the product that we are doing right now is going into exports. Small, sales are made in the domestic market, which are continued contracts. But most of the major quantity is going into international markets as bio-MEG. So that particular level of prices of 55 is not impacting us in terms of revenue, but yes, it is impacting in terms of the volume because it is bringing down our sales volume a little bit.
So any color on the realization you can give, sir, especially for the MEG front, out of the total bio-based specialty segment?
Our MEG price realization is much higher because it is based on ethanol feedstock price, and it's generally a formula-based pricing. So that's why when you see that the revenue has gone up, it is based on that. And
yes, please continue.
Because but the margins have come under strain definitely.
Since the raw material prices are on the higher side.
Saket, we are not selling and competing right now with crude-based MEG at all. Okay. It is only our bio-based MEG customers outside of India. That is where we are making our money. In the past, yes, we were also competing and selling in the domestic market opposite crude-based MEG, but that's not an area in which we are participating now. And the area where we are participating, where the prices are much higher, you are right, our margins have come down because of increase in energy and ethanol costs.
Okay. Sir, and on the sale of non-core assets, I think so. There is a long time that has gone that we were trying to sell off our non-core assets, especially for in the sugar segment. So, any update on the same, sir? Any likelihood of monetization?
Saket, the process is still, I will say, in process. But till now, the final agreement has not signed. So we cannot say that the final version has come out. It will take some more time. Although we are on the job, don't worry, and we'll update you once it is done.
Right, sir. And coming to the point about the biopharma segment also, sir, although this quarter, how correct it is, sir, to go for a quarter-on-quarter comparison for this N-Nature biopharma, because there also we have seen a dip in margin if we take the Q-on-Q numbers. So on a full year basis, if you could give us some color on how this segment is going to behave, and then probably two more questions from my side.
Yeah, Saket, Manish this side, and I could tell you that the numbers which are right now in the first quarter are being visible to you are basically because of the nicotine surge. So the volume of the nicotine are going to be same as per the this quarter, and this story is at least will be going to last till the March 23. So you are absolutely right that we could see year-to-year basis number much higher than the current last year.
Thank you, sir. The next question we have is from Rohit Nagraj from Centrum Broking.
Hello.
Rohit,
Yeah.
please go ahead.
Yeah. Good evening. Am I audible?
Yeah.
Yeah. Good evening, sir. Thanks a lot for the opportunity, and congrats on a good set of numbers. So first question is, Rupak sir, you mentioned 20 to 25 projects under development. What could be a potential size of these products for the domestic market, or if we are eyeing, say, international market? Just to gauge a sense in terms of from a 3 to 5 year perspective, where we could be in the chemicals business from here on. Thank you.
Okay. Look, I am going to be conservative and not throw a number up, but I will tell you that it is completely realistic for us to expect and build a business which is as big as, if not larger than, what has already gone into the joint venture. And underlining the word potential, I think potential-wise, it is significantly higher. It is just that we are at an early stages, and as you know, when you are setting up your R&D, you are being entrepreneurial, you are trying up so many products. It's just that I'm not hazarding a projection. But yes, we've done that work internally when we approved our capex for the new specialties unit as well.
Right. Got it, sir. This is helpful. Second thing is from the operational efficiencies perspective. Historically, our margins have been on the particularly from the specialty chemicals front, have been subpar the industry margins. When do we expect that we will probably be at par with the industry margins? Maybe you can give a broader timeline, and what are the constituents that will make this happen? Thank you.
I will talk about the constituents. We talked about the fact that we want to have greater presence in more value-added chemicals. So that's going to be the driver. The other driver is going to be the fact that, something completely unanticipated happened, and I think you will agree with me. This, tripling of coal prices, doubling of ethanol prices, it's only a last year phenomenon. And it is anybody's guess, but you would probably agree with me that this cannot continue forever. There will be softening. And the fact that freight prices for exports had gone up so drastically, have you heard of freight prices going up by 6-8 times in a year? Even 20% is high. So this has been a completely, unprecedented time. So we expect that there will be normalization of costs in freight, energy, and feedstocks. To what extent, how far, a little difficult, but I think anybody looking at a macroeconomic picture will say, boss, it should normalize. And the second thing which is in our hands is to continue to build a value-added business. It's going to take time to grow it. You need to develop products. You need to go to customers. It's not a commodity product with large volume start going immediately. So those are going to be the two factors which will help us improve the margins for the chemicals business. And we are acting on, one is a little beyond our control, except the fact that we are putting grain-based to help us in terms of our cost hedging, so to say. And the second is to aggressively look at more value-added products.
Right. Got it. So just one question for Anand, sir. What would be the debt now? And you indicated about 175, 180 crores of capex for this year. So what is the debt that we are looking at the end of FY23?
23.
Right, sir.
Hopefully, our debt will be around 1,000 crores at the end of the year.
Right. Okay. Fair enough.
This includes the working capital limit of 350 crores.
Right. Got it, sir. Thank you so much and best of luck, sir.
Thank you.
Thank you. Ladies and gentlemen, as there are no further questions, I would like to hand the conference over to Rupak Saraswat for closing comments.
So thank you. I've made all the comments that I had to make. Thank you everybody for giving us your precious time in the evening to listen to us and hear our answers. And we look forward to meeting you again in the next call. So bye-bye from our side.
Thank you very much.
Thank you, Ji.
Thank you.
Thank you, sir. Thank you, sir. Ladies and gentlemen, on behalf of ICICI Securities, that concludes today's conference. Thank you for joining us. You may now disconnect your lines.